Hi, welcome to the Market Alert for Wednesday, the 21st of July 2021. So futures rebound from Rout as buy the dip outweighs fear, even as yield slide continues. We then saw this headline as well. Traders are now panic buying stocks and puking bonds and bullion. I don't know quite about the last statement there, but certainly schizophrenic market returns. That I agree with. And this is a very interesting headline. Fiat money economies are built on lies. In view of the re-emergence of socialist Marxist ideas in the Western world, it therefore should not come as a surprise that central banks increasingly embrace the policy of raising inflation. And what is missing from this subhead and therefore crush the price of silver in response to when it should be moving to the upside. News today, we've got crude oil inventories, that's out at 3:30 p.m. and that's the only one. And another one which I forgot is the implied volatility. This down as the market moved to the upside, 17.18 for Monday, Tuesday, 14.73, so dropping there. So a bit of a risk seen to be removed from the stock market. So let's start off with the Dow and have a look, see what we've got. So yesterday we see a market that reversed, moved back to the upside and traded up to the 89%. As I mentioned in yesterday's market alert, by clicking it twice at the top of the bar with the fib tool, we could draw in these fib retracements, and the market came all the way back through these during the day. As the market moved higher, it just took them out until it traded up to the 89% of Monday's bar, again proving how important the 78.89 level is. We can also see that we've got the market stopping at the 20 bar moving average as well, which it will need to close above in order to move to the upside. We look at the 30-minute chart. We saw the market move higher after at 8 a.m. there, and then drift down and retrace, and it retraced as you'll see from this low to the morning high is 89%, right on it at 2:30. Sat there and then moved the market straight up, and within 30 minutes you can see the market moved 1, 2, 3, 400 points. Anything to bring the market back, as we've seen many times before. If I can find the daily chart again, there you go. So moving the market back sharply in the afternoon session. Meanwhile, in the DAX, similar picture, but certainly a lot weaker. This only managing a 50% retracement during yesterday, and looking weakish overnight below the 5-bar moving average as well. So the DAX certainly looking a bit weak there. Let me just draw in, if I can. I'll have to use the day before bar. So let me just get rid of this for a moment. I'll put those back in when the market opens. But on the downside, you can see that we've got the market currently finding support at 38%. And then we've got the other fibs there down to the major fibs. And there's one also tucked away down here as well. These are the downside targets if the market continues to move to the downside. If it moves back to the upside, well, we can draw back in yesterday's, or alternatively we've got this high to the low here as well. So let me just draw this in and redo that. It just doesn't like that part there, just a bit lower. There we go. So they're the upside targets, major ones, but again you can still use the ones on the down bar for Monday there. And in the metals markets, well, surprise, they continue to crush the silver price. Not as much yesterday, and we're seeing a bit of a test overnight, but I'm not convinced we're done on the downside. No doubt they'll have the $24 range in the crosshairs, to be honest with you. I think that's where we're going with this one. So, yeah, down to this sort of level first. When they start to test overnight, that's not really a good sign, because that 1:30, 2:30 time period is when you really got to take note of silver. Overnight, it doesn't really matter. Again, you can see that gold is barely moving. It's stuck in a range, and silver being hammered, which is again no surprise. But if you have a look at the gold silver ratio, you'll see why. Continues to move to the upside, 72 yesterday. First bit of red bar I've seen in the last few days on the ratio, so maybe we may get a bounce, who knows. But at the moment, certainly being hammered to the downside there. But gold holding its own. So silver at these sort of levels, if you were buying the physical, is definitely worth it at 72 to 1, with the ratio far more lucrative to do that. But yeah, we'll see. It's going to go up when they allow it to go up. It's so blatant. Well, it couldn't be more blatant, could it? I mean, it's as simple as that. Right, let's have a look at yesterday's session in a bit more detail. I'll just rewind. We can see that the futures market already starting to bring prices back. 6 a.m. yesterday, or around that time, getting back above the close. We've got this point, all of the averages in line, or more or less 5 above the 2020, above the 200. So let's fast forward to the open, and again you can see a bit of a sideways move, and then we take off. Now here again we've come back to the 200 MA. We're retesting this area. We broke through, yet to drive through the 200 MA, so it then became a support. Then prices moving to the upside. All of the averages all lined up with the 5 bar, indicating the momentum to the upside. We have a bit of a shakeout to the 20 bar, and then it's straight up as prices move to the upside. That flashing there was the daily chart. I was having a look to see where we were going with regards to the fibs that I drew in yesterday's market alert. And once we ran out of steam, you could see that prices there coming back, and then I drew in 89% at the high there. The market stopping there initially, still coming back and closing above the 5 bar moving average though. That's key. Having a look, we've gone through the 50. 62 was the next upside target. Prices then come back following the 89% at the top of this market. So this is why I use this, so you can find out if the market's running out of steam. Prices then close below the 5 bar and then move down towards the fib retracements of 38, the BRN, and stop. The market isn't going down at this point. It is then brought back to another 89, but this time manages to get through to create a double top, but fails to hold, and then comes back. And again, look at the volume in this bar at this level. Again, you can see huge volume compared to the previous bar, and not making any progress. So there's some selling there. That's confirmed with the upthrust. The market then tries to come back again, and then moves to the downside. We're then presented with a potential sell signal, and this you can see already that they're buying back into this market. The bar is less in range than the previous bar, and we've got the support there, and this area here. I'll just remove that, use the arrow there. We've got support there as well, where the market bounced back quickly. And on this information, again, you can see that volume now. Market's not breaking to the downside, likely to reverse, which it does. And as soon as it starts to out of the game, and then wait for the next one up to 89%. Then we get some selling, and then we start to move to the downside there. And on this occasion, I'll just fast forward. The market gets down to the BRN, and as it starts to close back above the 5 bar moving average, I then pull the trade. Thank you very much. Made up the loss on the first one after pulling it early, and then the market trades sideways to lower. Then manages to get down to the DP for a few more points, but obviously then found support at the DP level, worked its way back. I'm going to fast forward through now. Eventually the weakness comes in the morning, moves the market lower, and you can see I drew in some longer term fibs there, down at 78, 200 MA, and this continued in the morning. I'm just fast forwarding through the afternoon session here. There you can see how the market came back. And then we opened, the market came down, sat on the BRN. Again, you've got buying pressure here. Market attempts to move higher, is then sold back, and then again, this time we dip below. That creates an 89% retracement at this point. The market is brought back, and then the Dow explodes as the plunge protection team, and there's your 89% there. So down at that level, we haven't got a signal here, but just based on this information alone, we see the market test at 89. The buying comes in, and it's off we go, and then we just continue to break through and trade up. We did stop at this 89 at the top here, as you can see, but eventually breaking through. And again, I'm just going to fast forward through this up to the DP level, and then up to the BRN there, where you'll see prices trade sideways. Come back to the 20 bar, and at this point again you'll see the volume at the 20 bar moving average is greater in this bar than the previous bar. So again, the selling has been absorbed. We then get a buy signal, and prices move towards the upside. And as we get to the 89, I decide to take the profits off the table. Plus, I received a phone call from an elderly neighbour that needed some assistance, so I had to leave the desk at this point. But you'll see prices moving back up in a moment, and then continuing. But we came back through the 5 bar, and then they closed it back through the 5 bar as well, so maintaining that momentum to the upside. And that finished off the session with the official signals, but you can see there were other trading opportunities based upon the fibs and the price action as well. And at the moment, I'm actually in the process of putting this all together in additional videos, so we're with trading examples. Okay, that will do it for this one. I'm just going to go back to the DAX before I do. I just wanted to have a look at the 30-minute chart, see where we are in the bigger picture with everything, just to see how it's looking. So we're at the DP really at the moment. Market stuck at the DP level, so an interesting place to be there. So it's sort of balanced and at the moment, but certainly sideways overnight. So potential for upside and downside on that one, but obviously the low for yesterday will be crucial. Okay, that's it for this one. As ever, thanks for watching. See you in.